You've seen the headlines and want to know, how does this affect me? The good news is, as long as you don't live in a place like San Francisco or New York City where prices are declining, chances are your home has risen in value since the pandemic began. Why? There's two key factors, basically economics 101, supply and demand. Number one, owners are not selling because either A, they don't want to in the middle of a health crisis, or B, they don't have to because they're not paying their mortgage. At least they're on forbearance for the time being. This has led to a huge shortage in supply. So as far as demand goes, we've got record low interest rates. Buyers can qualify for a much higher mortgage and make the same, if not a lower, monthly payment. Let's watch this quick clip from CNBC on the concerns on why over 5 million people aren't paying their mortgage.
Andy, it's good to see you back, but we kind of thought or hoped this story was going to be over. What's going on?
Yeah, that's exactly right. And it sends a clear message that we're not out of the woods yet in terms of the coronavirus impact on the mortgage and housing market. Again, as you said, after 3 weeks of continuing improvement in the forbearance trends in the market, we clearly bucked that trend this week.
And this is in a big way. It says here this erases roughly half of the improvement seen since the peak of May. Do you know what has accounted for this? I mean, we can assume that some of the harder hit parts of the country because of coronavirus, is that prompting more layoffs? Is it people who thought they might be back in their jobs in places in the Northeast, but those places aren't reopening the way that they had hoped? Can you get any sense of that?
And I think there are a number of different drivers behind what we're seeing here this week. One is potentially more benign, and that's that we just passed the 15th of the month. And what we've seen in prior months is when you see those late fees charged on mortgages, it prompts some homeowners to go out there and initiate those forbearance claims. So perhaps a little bit of that. Another thing that we also see this month is that there were a large number of forbearance plans that were set to expire here in the month of June. Perhaps homeowners that had taken those forbearance plans out as an insurance policy starting to see some of those economic numbers, some of those COVID case rate rises, and they're sticking in those plans a little bit longer than they otherwise would have been.
Interesting. Where do you think this leaves the mortgage market in terms of, we just had the mortgage rate briefly dip, I believe, below 3%. You have new buyers coming in. But overall, does this, you think, negatively impact perhaps the spread on mortgages, or does it trickle back through any other number of ways?
Yeah, and surprisingly, when you look at originations and when you look at lending spreads, kind of the primary versus secondary spread, you've actually seen that fall a little bit, which has been helping to drive down those mortgage interest rates. It's been helping to kind of put upward pressure on that home buying demand and refinance incentive in the market. So it'll be interesting to watch that over the next couple of weeks to see if that shifts at all with some of these new numbers coming out. But we have been seeing those spreads improve in recent weeks.
And finally, as you said, this also could be a little bit of a monthly effect. We have people who maybe seen those late fees and thought maybe now's the time to enter forbearance. I believe our Diana Olick has reported this program will be around through the end of the year. So we could be facing a number of months in which a trend that we thought was a one-time trend could become somewhat recurring, right?
That's right. You have these monthly cyclical trends that take place in the market. The other big one is unemployment benefit extensions that are due to expire at the end of July. So that's a big one that we'll be keeping an eye on to see if and what impact that has on mortgage performance and forbearance volumes as well.
Yeah, that's a great point. Andy, it's good to see you again, sort of. Thank you.
The question remains, should I sell my home? And the answer is a resounding no. At least, not unless you have another home to move into. A better choice is to refinance. Take advantage of record low interest rates and anything that starts with a 2. And also cash out as much of that equity as you possibly can. In that case, you're insulated even if the market does go down. Also, make sure to smash that like button because everyone likes interest rates that start with a 2. You will continue to see headlines like this, and the housing market will fall, but you still need a place to live. If you do have a lower cost option for housing or want to cash out the equity in your home right now, it is the time. This is a complete seller's market in most markets around the United States. Multiple offers are coming in on properties. Buyers are battling for anything they can get their hands on right now. There is an extremely high probability that in the next 12 months, corporate bankruptcies and CLOs are going to sink our economy. But that's the topic of another video, and if you'd like to see more, please click on the link above. Make sure to hit that subscribe button and click that bell so that you can stay up to date on everything that happens in the real estate market.